Hello guys, how are you all doing today? This is me over here trying to teach you the basics and show you the effectiveness of smart money concept SMC as a strategy to enhance your profitability journey in the trading ecosystem. So we'll move on. So what is smart money concept? So I'll be doing a long series on basics of smart money concept and how to apply them and its effectiveness. So today I will just be showing you the textbook pattern of what SMC is and how to spot them. So basically SMC deals with three layers. So you have the structure number one, which is one of the most important things, which is also known as market structure. This is basically if you're in a uptrend, when it comes to market structure, you want to see higher highs, higher lows, and if you're in a downtrend, you want to see lower highs and lower lows. Then the next thing is what you want to see is liquidity. Liquidity is an area where most people will place their stop loss. This is liquidity just necessarily means inflow of capital, inflow of money, where the money is. So basically many people put their stop loss at where basically the lows or the highs, importantly. But these places are places that smart money know that's where you put your stop losses. So they'll come there, clear it out, and then before it will move in the way that it's supposed to move in. So that being sorted out, we move to the last part, which is point of interest. So there are various kind of points of interest in the people use in the market. So there is QMR, there is order blocks, there is breaker blocks, and there is key levels. So a whole lot. People use a whole lot. So basically, this is what we'll be using. We'll be using focusing on mostly order blocks. So let me just explain. This is just the textbook pattern of what SMC, what we are going to be looking for as SMC traders. So even though there's breaker blocks, but I usually don't use breaker blocks. This is just basically what I use, either the order block reversals or the order block continuation. So basically, this is what I want to see. I want to see a break. I want to see a break of structure or change of character like we observed in this place. There was a break here. There's a structure break here. There's a structure break here also. There's a structure break here also. And down here, this was the first pullback that didn't get to our point of interest. This is our point of interest. So this first pullback is what is known as liquidity. This is basically where the market is going to come back to clear. Most people will put their stop losses here to come back and clear this place and come to our point of interest. So basically, draw this out as our liquidity, and market comes here and then goes straight to our TP. Usually most people put this place as their target, but I like to have a fixed target, maybe 1:5. Some people use 1:3, some people use 1:10. Whatever fits you, whatever you have tested that works. So that is just how the basic concept of smart money SMC. So basically I'll be heading over to the charts and I want to be showing you lots and lots of examples of how SMC works, how it can be applied. So basically, this is a BTC chart, BTC USDT chart, and let me show like one or two examples here, and then I will head on to derive to synthetic to show some other examples of smart money concept. So this is the 15 minutes chart. So I'm just going to look for a setup that happened recently. So basically, what do we see here? What do we see here? What do we see here? What do we see? We are seeing the market having higher highs, right? Higher highs. Market keep breaking structure to the upside. So BTC has been in a long run. So we keep seeing. I'm looking for a setup that clearly illustrates what we have been talking about since. Oh, I found one. So basically, this is how it works. This is how SMC works. So this is the market, right? So this one now is the order block reversal. For you to see the order block reversal, you first of all you have to see a sweep. So you see the sweep. The sweep has to be before your point of interest. Liquidity sweep. And then what do we have to see next? Then we need to see a break of structure. Break of market structure. See example like we have in this place. This place now is a change of character. Because before it looked like it was in a downtrend. Or market structure shift. MSS. So you can see. So now where is the first pullback? So this is our point of interest, mind you. This is our point of interest. Let me just label it as OB, which stands for order block. So this is the first pullback that the market made that looks like as if it was wanted to come to our point of interest, but it didn't make it. So we'll mark it out. We'll mark it out as liquidity. So imagine we set our orders here. Imagine we set our orders here and put the stop loss a little bit below the order block, and then we run it up to this eye. This eye, let's use this eye as the target. So what are we going to be having? This is what we are going to be having. 1:3. See, this is an healthy profit. So you see, this is just how SMC works. It works on almost every pair, almost every market system, but it works more in some than in some. Like in some, it works very effective more than the others. So let's move to synthetic pairs, because I recently have been doing more synthetic than other pairs. So this is V10 1S. So what are we seeing here? So basically at this point, my network is not that good. That's why the chart is not loading well. At this point, there was a break of structure to the downside. So what happened? This is our point of interest. So we said structure, liquidity, point of interest. This is our point of interest. This is our liquidity. There was a little pullback that it didn't get to our. This is our liquidity. It didn't get to our. See, the market just came in, cleared our liquidity, got into our point of interest, and then shot all the way down. See, our stop loss has to be a little bit above the. If we target this low, we'll be having 1:4 setup. So you imagine now. So this is just how it is. This is just how it is. Smart money concept. With smart money, you can never go wrong. You go wrong sometimes, but you will win more than you lose. If you understand the concept clearly, you do a lot of wins. So basically, this is another setup we are seeing here. If it was on a smaller time frame, like the 5 minutes, this is a 10 minutes time frame. If it was on the 5 minute time frame, it would have been more and more defined. So basically, what are we seeing here? We were seeing a break of structure at this point. This was the break. This is the point of interest we'll be focusing on. The other block at this side. Once we focus on this other block, then where is our liquidity? That's the first pullback in May that didn't get to the point of interest. So if we place our short position, imagine we placed our short positions here. Would have been up for a decent 1:5. 1:5 setup. You see the magic of SMC, right? You see it just keeps happening and happening and happening and happening and happening and happening. So this is another setup. But this one now is for the uptrend, for a long order. So you see there was a break here, over here. We had a break of structure here. Market just came in and shoots back into our point of interest. Touch it, position, and then proceeds to go up. So you should look at it clearly. Smart money concepts. Now look at this part of the whole thing now. Look at this place now. At this point, this was a break of structure. Market broke structure here to the downside. This was liquidity. It was the first pullback that failed to come to our point of interest. This was our point of interest. This other block. So we'll put our entry here. So basically this particular setup now depends on where you put your stop loss. I like to put my stop loss a little bit above my POI. That's my point of interest. So this is where it ended. So basically, if you put your some people like to put to achieve a tight risk to reward ratio, some people should put it exactly there. So you see, if you have put it exactly at the end of your POI, you would have ended up for a very massive loss. So you can see, Abby, that's why it's advisable to put it a little bit above. A little bit above. Don't be greedy. Put it a little bit above, so you know that, like, sometimes whenever there is a market manipulation, you'll be safe out there. And that's just, imagine 1:4 setup. So that's just what smart money concept is. So this is also another block here also. So first of all, there was a break. There's a break of structure over here to the downside. Market kept clearing it. and this was liquidity which failed to move up to the other block over here. This also is another block. In smart money, we call this other block continuation. This is an other block continuation setup. So it's basically you are continuing in a trend that has been moving. So basically, you see, Abby, smooth entry, precise entry. So you come here and then you place your entry here. Put your stop loss a little bit above your other block, like I said in the past, and you see smooth entry. This is also another setup on smart money. You see break of structure happened here. Sorry, a market structure shift happened there. Market also broke structure to the downside over here. So what do we have? We have this as our inducement. The pullback, it failed to get to our point of interest, and then this is our point of interest. You see, one of the reasons why I said your stop loss must be a little bit above. This one nearly cleared the point of interest. So if you set your short position here, you see, and you should force setup. So that's just the beauty of smart money. Smart money, that's why it is called smart money. You are trying to put your entry point at a place where you think its market must reverse back in your direction, that's in your favor. So this is also another setup over here. This is other block continuation. So we see a break to the downside, and this was the first break we saw here. So a break here, break of structure here. We saw a break of structure also here. So what do? We do what we do best. We mark out our point of interest, this place, this other block here. See our other block. Where is our liquidity? This was the pullback that failed to reach our other block. And then we'll put in our entry here. That's why I said you should always put your stop loss a little bit above your other blocks, because you don't know which time the market is going to be trying to be manipulative. So some people do 2x their other block size. That's this. If this is the size of your other block, your stop loss is times 2 of it. Or some people do one and a half of it. So anyone that fits you, but I just put mine a little bit above to make sure that whenever there's any manipulation like this, spot this manipulation over here, book past the other block to clear out stop losses, and then only for it to go back to the normal direction that I have predicted. This is also very, 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 very painful as a trader, to see the market going back to where you predicted it to go with you not being there. So this is just what we know about smart money concept. Oh, I marked this order since I took this trade. Since I took this trade. So basically, you see break of structure over here. break of structure over here again. Then this is my POI point, this is my point of interest. That area, that box area is outlined. So this is my liquidity. This, I don't remember what to call liquidity now. First pull back that failed to reach your other block. So we'll mark it out here, liquidity. And then imagine this is what the market did. Immediately it got to our other block. If my entry would have been at this point, and then boom. So this is it. 1:6, almost 1:6 setup. So this is it. This is just what it is. Structure, liquidity, point of interest. If you'd like to log in with me, follow us now, subscribe so you might not see me again. So that's just what it is. Structure, liquidity, point of interest. It's that simple. Most people are just trying to bring out big grammars, big words. It's just what it is. That's just what I've shown you. It's as simple as ABC. It's as simple as ABC. Let's do one more example. So basically, this is a break of structure to the upside. Market broke this structure to the upside. So what do we see here? Market structure shift, change of character. So what do we see here? We see an order block over here, two of us. And where's our liquidity? This is the first pullback here that failed to get to our point of interest. And why liquidity is so important is because if you can't see liquidity, trust me, you are the liquidity. You are the one that is going to pay dearly for it. That is why this is another block here. And if there is something you want me to talk about that you are not getting, just put it in the box over there, the comment box, and then I'll go over it. So you see, this is the one we should. So I target this eye over here. This is the 1:6. 1:6 setup. Clean 1:6 setup. So basically, that's just what this smart money concept is. It's as simple as that. Just set your limit order, go about your day. Just analyze, set your limit order, go about your day, and the market will just come to your point of interest and take your trade from there. So thank you guys. I really appreciate it. Thanks for being with me. God bless you. Subscribe to my channel. And if you want to register, this broker is Deriv. Synthetics, you will always find it in Deriv. This synthetic, you find it in Deriv. So I will set my link and then I would use my link. God bless you. Thank you so much. So you see this setup over here. Clean. These are liquidity down here. This is our setup. God bless you.